perhaps even define Tesla's future for the next 3 to 5 years. At the moment, I believe the main source of anxiety is the Model 2, which is a crucial component of the growth that will account for 50 to 60% of the additional growth over the next 2 to 3 years. Robot taxi autonomy won't happen for another 5 to 6 years, and I'd say that after the last 10 years, we've seen a lot of white knuckle moments from Musk and Tesla. This is up there, and this is really a Cinderella story that is soon turned into a nightmare on Elm Street. He needs to be in charge of the narrative, because without an adult present, there may be darker days ahead. Nevertheless, the future looks exciting. As we examine two astounding predictions that are paving the way for a dramatic change in Tesla's future and the automotive industry as a whole, we'll first examine a startling prediction from a leading Wall Street analyst who is not only upbeat but downright bullish on Tesla, speculating that the company's market capitalization could not only rebound but soar to previously unheard of heights in the near future. After that, we'll examine the excitement surrounding Tesla's highly anticipated Robo taxi event, which is regarded by some as possibly the most historic day in the company's illustrious history, and could propel Tesla well beyond its current technological and commercial accomplishments. Finally, we'll examine the implications of these predictions. Examine the factors influencing this optimism and consider the potential effects these changes may have on the market and your investing plan. This episode is specifically designed for you, whether you're an avid Tesla fan, an inquisitive investor, or someone who is captivated by the quick speed of advancement in automotive technology. So buckle in. If you haven't already, click the like button and sign up for Tesla stock news. Then let's explore these incredible advancements in the Tesla and beyond universe. In the world of what is typically thought of as just an automobile company, Morgan Stanley recently released a report advising investors to think about broadening their valuation model for Tesla to include various AI sectors like AI compute, energy storage, and possibly humanoid robots. This shift towards a heavy AI focus is quite extraordinary. The story around Tesla is starting to shift, according to prominent Wall Street analyst Dan Ives. It is unclear if analysts will keep concentrating mostly on Tesla's automotive margins, or if they will begin to see the wider ramifications of the company's AI advancements. Joining us right now is Dan Ives, is Wedbush Securities Managing Director. Dan, and so much are beginning to believe that Tesla could reach $1 trillion market valuation as a result of the company's release of ideas like the Robo taxi. Because if investors really understand the potential here, one might think they'd be more proactive in their strategies. The financial results from these innovations then join in the fray in a somewhat sheep-like behavior. Dan Ives highlights that the impending Robo taxi event may be the most momentous day in Tesla's history, possibly paving the way for a significant shift in both autonomous driving technologies and robotaxis. Fundamentally, an AI and autonomous technology company that is a disruptor in the tech industry, Dan predicts that Tesla's stock could double in the next 12 to 18 months. This prediction, particularly from an experienced analyst like Dan, highlights a strong belief in Tesla's future trajectory. Despite this optimism, however, Tesla's stock is still below its all-time highs from 2020, which undoubtedly provides for resources. Now that we're talking about Tesla's internal dynamics, the company's staff has shrunk by 14% since Elon Musk announced layoffs in April, bringing the global headcount down from over 400,000 to 121,000. What effects might these layoffs have on Tesla's ability to grow and save costs? Even though the layoffs are difficult, they appear to be a calculated move to streamline operations in light of declining global demand, particularly from important areas like China. As we move to the next quarter, expectations may be lower, But these adjustments might pave the way for major future gains. Despite navigating through what could be called a Category 5 hurricane, Tesla seems to be on the verge of a Cinderella moment that could revitalize the company, especially with its AI ambitions. Let's change course and examine the possible difficulties that could arise when Tesla's robot taxi is introduced. Tesla has a well-established track record of generating a lot of buzz about the introduction of its new product, which has been both advantageous and detrimental to the business. The introduction of the Cybertruck, which attracted a lot of media attention and public interest, is one noteworthy. For example, interest stemming in part from its unusual design and the unanticipated incident during its window durability demonstration could create a complex environment for the launch of the Robo taxi. On the one hand, the hype helps attract investor interest and consumer excitement, which are essential for the adoption of new technologies. But on the other hand, it raises the stakes for Tesla to deliver on its promises. If the robotaxi fails to live up to the high expectations set by the company's aggressive marketing, it could result in disappointment and erode consumer trust. Furthermore, the challenge is not just about meeting expectations, but also about aligning them with the realistic capabilities of current technology, which could impede the smooth launch and operation of robotaxis. Tesla needs to carefully manage two crucial factors: public acceptance of driverless vehicles and regulatory permission. The logistical and operational difficulties of deploying a fleet of autonomous vehicles should also be taken into account. These difficulties cover everything from the infrastructure required to support these vehicles, such as maintenance facilities and charging stations, to the software updates and cybersecurity measures necessary to ensure their safe operation in light of these factors. While it's good for drawing attention, the excitement surrounding Tesla's new releases need to be controlled to prevent it from surpassing the technology's actual advancement and readiness. There must be a careful balance struck between creating excitement and controlling reasonable expectations. Finally, when we go further into Tesla's innovations, it's critical to take into account the larger dynamics of the electric car market. This is a balancing act that Tesla has had to execute time and time again, and one that will be closely examined with the introduction of the Robo taxi. By joining the EV market with its own high-end electric sports car, which will be released next year and costs an astounding $500,000, Ferrari is making major progress. This action demonstrates Ferrari's dedication to moving into the electrified future of automotive excellence. This development underscores the industry-wide shift towards sustainable mobility solutions, as well as the growing competition in the luxury EV sector. As established luxury automakers like Ferrari adjust to this new electric landscape, it will be interesting to see how their entry affects consumer preferences and market trends. CNBC's Robert Frank recently had the chance to talk with Benedetto Vigna, the CEO of Ferrari, on the future of electric cars and the company's strategic direction in this changing market. Vigna expressed optimism in the move towards electric vehicles, stating that he expects a sizable portion of current Ferrari owners to switch to electric models as more buyers try out the company's electric models. His comments highlight a larger trend in which even Ferrari and other legacy high-performance brands are adjusting to the electric revolution. Vig's observations show that Ferrari is not merely experimenting with electric technology. Rather, they are placing a strategic wager on its future. This move by a company that is renowned for establishing the benchmark for automotive performance and luxury signifies a substantial shift in the direction of the sector. Historically, manufacturers of high-performance vehicles have relied on internal combustion engines. However, the competitive landscape is shifting due to the superior performance metrics of electric vehicles, such as the acceleration times seen in Tesla's Model S Plaid. In fact, traditional manufacturers like Ferrari and Porsche are now rushing to catch up with these electric models' rapid acceleration capabilities. This shift to electric vehicles is seen as not just an option but also a necessity for survival and relevance in a market that is increasingly dominated by electric first companies like Tesla and Lucid. How conventional luxury and high performance manufacturers can use their brand and pricing is very intriguing. As we conclude today's discussion of Tesla and the changing automotive landscape, it is evident that the industry is at a pivotal point. Morgan Stanley's expansion of Tesla's valuation model to include AI and energy storage, to Tesla's potential recovery of a $1 trillion market capitalization. We also explored Ferrari's electric future, highlighting the industry-wide shift to electric vehicles and how traditional luxury manufacturers are adjusting to meet new performance standards set by electric technology. Your opinions and insights on these subjects are really valuable. What do you think the future holds for Tesla and the automotive industry as a whole? How do you see the role of artificial intelligence and electric technology evolving? Don't forget to like, subscribe, and click the notification bell to stay up to date with all the latest from Tesla stock news. Thank you for watching, and we look forward to your comments and discussions.